The path to acquisition is not for the faint of heart. It's hard, it's long, it can be solitary. The nice thing about the search fund community and the approach that we're taking is, unlike venture, we generally have 8, 10, 12 investors around the table. So there's an awful lot of collaboration. Because it's such a closed loop system, we can do things that just aren't possible in other arenas. Like I was at Microsoft early on. That was fun because we felt like we were really changing the world. I really feel like search has the same opportunity. No matter where you are on the political spectrum, we can all agree that America is great because it's such an entrepreneurial country. And what I like about what we do is by the time someone says, I want to go be a searcher, they come in eyes wide open. It's gritty entrepreneurialism at the core. And not everybody should do that. In fact, most people shouldn't do that. It's not for them.
All right. First question. You mentioned that search funds originated at Stanford, where you have earned 3 degrees. What's the story behind that innovation, and how did it influence your decision to launch Agate Hound Fund?
Well, Stanford was definitely my happy place, which is one of the reasons I spent so much time there. And Stanford is in the center of innovation. And I didn't go there knowing that. I think students today maybe think about that. But, venture capital being around it. But while I was at the business school, there was this thing invented called search funds. And it started in 1984. I graduated in 88, but it wasn't even a thing really then. People were just starting to think about buying small businesses. And it wasn't formal, and a couple of students were doing it. And only years later did it become known as search funds. And only years later was it formally taught broadly at business schools. So it really is an amazing path to entrepreneurialism. And you could go to business school because you want to become a great manager. I think that was the old way of thinking. Management is still an incredibly important skill. But you may want to go to business school to be an entrepreneur. And that wasn't really being taught. Back in the day, you were taught accounting, you were taught ethics, you were taught, the basics of business and some management thrown in there, and you did a lot of case studies. So a lot of what happened was this course, if you will, was created real time by the true experiences of the entrepreneurs going out seeking, that's why it's called a search fund, seeking to find a mom and pop business. And people always say, what kinds of businesses are you even talking about? They're not sexy. They are pool cleaners and meter readers and dental clinics and med spas and machine parts. And, I think about when I drive down the street sometimes, I think about all the various small companies that are involved in making up our daily life. And these are the kinds of businesses that truly are what makes America America. We're unique in the world, I think. And it's also this huge opportunity, again, not terribly sexy at a cocktail party, but really sexy when you think about the opportunity to take a good company and make it very good, if not great. And so back at Stanford, several students, led by a couple of professors who really was encouraging people to think about what is now called ETA, or entrepreneurialism through acquisition. And they were incredible mentors, coaches, and support mechanisms for these fresh MBAs who had probably never run a company before to go out and help them throughout the whole process to success. So I don't like the term search fund because search means Google to many people, and a fund sounds like a venture fund. So people now call it ETA, as I mentioned. But really, the path to acquisition is not for the faint of heart. It's hard, it's long, it can be solitary. And what it is an MBA comes out of a Harvard or a Stanford or one of the top business schools. It was invented at Harvard and Stanford. And they raise a pool of money to basically make sure they can live off of it for up to 2 years while they do this outreach. And they generally say, I don't know, I'm interested in maybe these three related industries, and I'm just going to go to the trade shows and start calling people and meeting the CEOs and learning about the industry. And hopefully, and it doesn't always happen, hopefully they get an interested seller and they engage them and go through a due diligence process, and they end up acquiring it on favorable terms that feels like a win for everybody. And then they got to run the thing.
There's a couple points I'd like to double click on. One, you said that it's not sexy. These businesses are the fabric of society, but they're not sexy. However, search funds are often dubbed the best performing asset class of, say, the last 40 years. Yet they're still relatively unknown in the mainstream. Why do you think that is? And why, like, what's the correlation there with these unsexy businesses performing better than other asset classes?
Well, I love that you just implied that high returns for 40 years is sexy, because it is to me. But that just says something about me and what I like. Um, I think it has been under the radar. And all of a sudden, as the job market is shifting, as more business schools are teaching it, as we have social media so people can get on their soapboxes, you're starting to hear a lot more people say, hey, go out and buy a small business. And I think that's great, because it's definitely opening up people's eyes. But when I talk about search funds, and I specifically am talking about a niche within a niche within a niche, the traditional search fund from these best business schools run by these recent graduates, I think it is 20 different things that make it work. And it takes people, when I'm explaining it, it's not a 5-minute conversation. I sometimes like to say, I was actually having this conversation this morning, and I have to know who I'm talking to be able to come up with the comparison to describe this in the right way that the light bulb goes off. If I'm talking to a real estate person, I say, this is like buying a Class B apartment that's probably not been updated or isn't managed particularly well, but maybe in a good location is making money. So we buy it and we do value added services. Maybe we redo the carpets, we put some paint on, we manage it better, we raise the rents, the margins go up. That's essentially what we're doing with small businesses we buy. These are good businesses. They're making money. They're cash flow positive. They're EBITDA positive. The people who have been running them have done a good job. They care a lot about it. But the people running them are baby boomers. And baby boomers are aging out. And societally, what used to be that the kids would take over is no longer the case. So there is this massive opportunity today. They sometimes call it the silver tsunami, right? There's this massive opportunity to go buy these businesses. By going out and buying a business by itself, the hit rate on success is way lower than following the playbook that we invest in, the search fund ETA playbook. And it's because and as I said, it's 20 reasons. We're very disciplined about what we're buying, the types of company, the multiple on valuation. We have trained the jockeys, the searchers, for a year or more with conferences and classes and business school case studies. They've listened to podcasts. They are ensconced in this, and this is what they want to do. They also are part of an ecosystem of many other people who have successfully done this. So I don't know if you know YPO, but YPO has this concept of a forum where peers, get together once a month and support each other and hold people accountable and give suggestions and resources. That's what happens in the search fund world. Okay. There also, I did venture capital for a long time. And I love venture, but it's changed a lot. And the frustration I've always had with venture is a misalignment between early stage investors and later stage investors and the founders. And whereas in search, everybody's aligned, everybody's on the same page. And that leads to better results. What's also true in the ETA world is everybody knows everybody. So that's very powerful. The bad actors have been weeded out. If you're not adding value, if you're not showing up with integrity and there's actually a value statement for the ecosystem, if you're not part of that, then you're out. And I take that very seriously. I think about how do I add value as an investor. It's a different mindset. Because it started at business schools at Stanford, Harvard, the mentoring and coaching and teaching mindset that comes along with it, sure, success is very important. That's a scorecard. But the lifting up the CEO, lifting up the searcher as part of it, that growth, that's very important to everybody too. That's some of the joy that we all get out of that.
It's all good. You already started getting into that second question, so I just let you keep going. Thank you. You brought up that you were an investor in venture capital. Now you're an investor in a fund of funds, but backing searchers. As from the investor lens, how have you had to change your approach going from venture capital now to search funds?
How to say this delicately? I am very lucky because I'm really riding off the hard work of the underlying funds. I used to be that person. I'm at a different place in my career. And let me be really clear, I've never searched, acquired, and successfully exited a small business. I've run a small business, I've owned small businesses, so I have a good sense of empathy and idea about what it means, but I've never done it. So, get this guy out of the way and put people in on the board and the investor set who have done it directly and are current. And so we're investing in those people who are going to add a ton of value. So, at some point in your life, you say, what are you good at and what aren't you good at? And I look at this asset class, and in a weird way, it's the most obvious thing in my 30 plus years of business. I just look at it so obvious. And I have to keep reminding myself that I'm not everybody else and that what's obvious to me may not be obvious to everybody else. But I will say I am batting 1,000 when I can take someone to the Booth Search Fund Conference and show them and introduce them and allow them to see the different breakouts and to meet the searchers and to see the type of people there. They all go, okay, I get it now. It's a very powerful energy within the collective, I would say. And so, venture, I was day to day, I was picking the companies, I was sitting on boards, I was trying to add value. Here, I'm trying to get to know and be part of the best funds. And the reason why, if you look at the maturation of other asset classes, hedge funds or a venture or private equity, they all have fund of funds for a variety of reasons, access, diversification, right? So it just seemed like it was time for search to have a fund of funds. No one had done it before that I was aware of, and I don't think anyone has. And we're not big, we're a small fund. But I'm the largest investor in my fund because this is what I wanted to invest in. This is how I want to spend the rest of my working career. And these are the people I want to be around. And so it was I got lucky. It's the perfect match to my interests and to my core value of continual learning and my core value of trying to give back. And so I loved venture, and I felt like I was there right when it was doing that. I feel like I've said this before, but search feels like venture 30 years ago. You're starting to see innovation in models. You're starting to see more money come in, some more people. And so it's fun to be at that. That's where I love, like I was at Microsoft early on. That was fun because we felt like we were really changing the world. I really feel like search has the same opportunity.
How does Agate Hound Fund work under the hood? What does the portfolio construction look like, and how do you select which searchers or funds to back?
It is not unlike the other asset class fund of funds that I've mentioned. So we go out and we have a set of criteria for picking the best funds to invest in. And some of our criteria are, do they teach the class at a business school? So are they able to source the best searchers? What a unique opportunity to be teaching a class and then investing in your best students. Unusual. And one of the secrets, one of those 20 that I talked about, is the underlying fund have a track record? Does the underlying fund have a strong NPS score within the community? Does the underlying fund, well, there's a geographical consideration. We're focused on North America. And then what are they doing as the asset class changes to stay current and to continue to be at the top of their game? Because it is a moment where the asset class is changing, like everything in this world, right?
I'd like to also ask you about the global ETA opportunity. You've worked across the US, of course, but also Argentina and Asia. How do you view the global potential for ETA?
I think it's just simply massive. We have, I just had 2 conversations today about this. Spoke to a guy in Portugal who teaches ETA at a business school there. Europe, like America, has baby boomers that are exiting companies. I spoke to someone today who's the first woman searcher in China. So 6 of 7 continents now have search. And there's conferences. I went to Barcelona for a search fund conference last year. It's everywhere, and it makes sense. In Japan, let's give you the example. In Japan, where the birth rates have fallen, there are not enough people to take over good businesses, and some of them just close their doors. They created all this value, legacy, growth, and there's no one to buy it. How sad. I will say this: America is particularly good at the infrastructure and laws and lending and so forth for small business. And the opportunity set here is just so big that I look into other areas, but there's a lot to do right here. But it's exciting to see entrepreneurship be part of what's happening throughout the world. 10 years ago, I was invited to go speak outside the country on venture. This year, I am going to Italy, Mongolia, Romania, and I'll be speaking about search funds.
Amazing. Sometimes search funds or ETA colloquially is referred to as micro private equity. Do you think that's an apt moniker? If so, if not, why not?
No, it's lower market private equity. But again, I think that oversimplifies what we're investing in. It is, I mean, to say it's lower market private equity, you could say it's $1 to $5 billion EBITDA. That's not the playbook. That's a target. So we've got a playbook that we're investing in. That's why I said it was a niche within a niche within a niche. We believe that the playbook is as powerful as the market itself. So, but yeah, it's low, and that's why you don't see, by the way, a lot of money from the funds going into it, because you can't scale it. It's messy. It's a lot of roll up your sleeves and get in there kind of stuff. And let's be honest, why are big funds big? A lot of times because they want the management fee on a large assets under management, AUM. Well, that's not the game in search funds. Funds are generally pretty small. And I mean, we're tiny for a fund of funds, but I'm not doing it for that reason. So, but yeah, we're definitely focused on lower market private equity where we can buy at a fair price, grow it, and sell it to more traditional private equity at a larger multiple.
For new LPs curious about this model, how do you communicate the risk adjusted returns and potential pitfalls of search fund investing?
Yeah, it's funny. I had someone today say to me, how can I believe the 35% net annual returns for 40 years? And it's not me saying that, it's the Stanford study, which is updated every 2 years. And so it feels pretty bona fide to me. And by the way, that study does two additional things. It takes out the top outliers of success, and you're still above 30. So you take out the Googles and the NVIDIAs and the Microsofts, if you will, and you're still above 30 over that same period. And that study looks at every search, including those that didn't acquire and including those that failed after they acquired. So it is a very robust data set. So, I mean, it's hard to argue with that. There are certainly people who will say that the returns are going to go down because more money is coming in. I could counter that. We could talk about that. But what I would say to you is when you're starting 25, 30, 35, you're in pretty good, you have some room to still, on a risk adjusted basis, outperform. Here's how I think about it. Goldman Sachs and Morgan Stanley, within the last couple of weeks, have come out with their crystal balls and basically have said something to the effect of that over the next 10 years, the double digit public market returns will be somewhere between 3 to 6%. So if I'm getting, or if search funds are getting, and thus if we're getting teens to above that on a risk adjusted basis, because it does have less volatility, then that seems extremely compelling to me. And in 40 years, because you're not having to do second and third and fourth rounds, you generally don't have any down years. And you don't have a ton of correlation because the types of companies we're invested in aren't subject to the whims of the overall real estate market or the stock market. And so for me, it's very compelling. I guess I'll just say that.
You were ahead of the curve on some legendary companies such as Seagate, InfoSpace, Facebook, and DocuSign, to name but a few. What lessons are you applying in the search fund space that you gained in VC?
I might say the same answer, and I'm really not being flip, but honestly, part of it is a big part of it is luck, and I'll say it this way: is you'd never know. I mean, I have people who have invested in search for a long time, 20, 30 years. And when I say, well, now you've got all this pattern recognition about what makes a great search or make it great, in behind closed doors, they always say, I'm kind of always surprised. But you have enough of a smell test around people and ideas that I think I'm okay at it. I don't, I'm certainly not the best. There's amazing people out there that do it. But I feel like the difference between venture now and search on this point is the funds get to know the students in the classroom, and then they have a 1 to 2 year interview while they're searching. So the person risk is diminished greatly in search by the time the acquisition comes and you say, do you want to invest in this jockey? That is a massive thing that people don't fully understand.
Jan Simon at ESA in Barcelona mentions that it's kind of CEO training, like you're kind of proving yourself in the search phase.
100%. And also, are you coachable? Are you making good decisions? Do you have the tenacity? Are you using resources smartly? All those things. Versus someone comes in, I've got a hot deal. I don't even have a PowerPoint, But here, it's a $10 million pre, a $20 million pre. Everybody's in. You want it today or you don't. We can move on. I don't know how to do that.
Have you ever heard of or come across a situation where someone was good for the search phase, or they found a business that looks like a good find, but maybe they're not maybe the best person to run it?
100%. I mean, we're not perfect. I mean, the nice thing about the search fund community and the approach we're taking is unlike venture, where you have a lead and maybe one or two other, we generally have 8, 10, 12 investors around the table. So there's an awful lot of collaboration, both in supporting that searcher slash CEO. And then if a change needs to be made, people on the board have done this before. They may step in, or we know people who have successfully exited and we may bring them in. Because it's such a closed loop system, we can do things that just aren't possible in other arenas.
Seems more like a team sport, like just get the ball over the line.
That's a great way to say it. It is a team sport.
A little bit of a pivot here, but I think it's interesting. You studied Chinese and hold a master's in Asian studies. Do any Eastern philosophies or business insights inform how you make decisions today?
Oh, I think absolutely. I That's a great question, by the way. I read what's it called, Shoe Dog with Phil Knight, and I think that really resonated with me. He was a practicing Buddhist. Um, I remember a CFO from Microsoft early on in my career. He was leaving, he was retiring, and I said, Frank, I got to ask, what's a piece of advice here? And I loved it. I loved it. It was always allow people to wake up smarter in the morning, meaning we all make mistakes, we all react, but let time also play into the overall equation. And I think going back to your question, Buddhism really is about the sense of detachment and mindfulness and headspace. And I do try and practice that. Well, I meditate every day, and I try and practice that with people over and over. And honestly, it's a lifelong practice. I love the word practice, and so that does inform. That informs a lot of how I look at people and companies and the situation and attachment to that.
Yeah, thanks for sharing that. I myself find there's a balance to be struck or strive toward between being intentional, focused, and active, while at the same time, maybe counterintuitively or ironically, letting go of the outcome and observing. And I like the way you phrased it. Allowing people to learn, allowing yourself to learn the next day. What's your vision for how the search fund landscape will evolve over the next decade, or maybe even 5 years? Seems like this next 5 years is going to be about a decade's worth of growth.
Yeah, David, these are great questions. I am pinching myself because I know I'm on the front row. I have a front row seat of one of the most exciting business opportunities, asset classes in the history of the world. Just think about it. There is the greatest wealth transfer ever, ever happening. Trillions of dollars, 10,000 businesses a day is the number I keep hearing, and AI. I mean, I don't know what AI is going to do, but it's going to happen faster and more profoundly than I think we can all imagine. And I would rather have the 35-year-old from Stanford Business School sucking that up and thinking about how to use it while their 65-year-old competitors are still doing it with a fax machine and paper and landlines. I mean, honestly, like that is really the case. So it'll be disruptive, but I think the opportunity is what is most exciting. And so I think the next 10 years, I think it's the golden age. We'll see if I'm right or wrong. I've been wrong many, many times, but I'm super excited about thinking about how I can help bring that with my tech background to the ecosystem.
It makes a lot of sense. The Stanford primer is a great place to start, and the way they lay it out, like you said, even back in '84. I mean, there have been updates, but it goes back to the age old, like master apprentice. You've got people running a profitable business already. You're stepping in with good support with the board and with the community. And then you have let's say, like you said, 35-year-old MBA bringing in some of the latest and greatest practices, and then learning with what worked in the, yesteryear. And that kind of synthesis can make something greater than the whole of its parts, the sum of its parts, rather.
I think you've done a really nice job summarizing it, and I like how you talked about team sports. I also, to extend that metaphor, these are the minor leagues waiting to go to the major leagues, and most of these companies are being groomed through the coaching, through the experience, through the classes, through the ongoing education to get to a size where the big guys are going to buy them. And by the way, for the searcher, and I care so much about the people, they then basically have earned a PhD. They've successfully, it was a grind to find the company. They got an M&A deal done. They had to come in and transition both with culture and business and people. And they grew it and they got it sold. So now they're ready to start their own fund, go teach, go do it again. I mean, it's just the path is very, very exciting. And the people that do it, it's one of my favorite things, is they're not afraid of hard work. They're not afraid of climbing mountains. They're not afraid of sleeping at the office. They say, hey, this is a great opportunity. There's no glass ceiling. It's on me. I'm going to do whatever it takes. I like being around those kind of people.
Will we see more democratization of search funds, either through platforms, syndicates, or retail access?
I think we're going to see a lot of models. I still strongly believe in the model that we invest in, but it's not going to be the only model. And it's already happening. And it's very exciting. And the opportunity set's big enough. So I don't, I know some people, especially some of the people who have been doing this for a long time, are probably not interested in spreading the word or, looking to open it up. I mean, it will have an impact. That even today, what's happened is sellers, because of AI and automation, are getting now calls. Do you want to sell your business? You want to say, so the noise has increased. But the tool set, if you want to go out and buy a business today, oh my gosh, you could get online and listen to podcasts 24/7, right? There's great books out there. As you said, the Stanford Primer and podcasts. And there's so much. So if you want to go, and I mean, I live in Seattle. There's a small business meetup for people who want to buy a business. It's over 125 people who monthly are connecting. So it's a very exciting time for this.
Given how lonely and stressful the search journey can be, what kind of support or coaching do you think searchers really need beyond capital?
A lot. And by the way, having one of the things I'm trying to think about is how I can create more peer groups for the community, because it can be lonely. But the nice thing about, again, the traditional ETA platform that we're investing in, if you've got 10 investors around the table, those people are super active. You're talking to them all the time. And it's not surprising that searchers often will get interns. So they're not doing it by themselves. And there's lots of conferences. And the funds that invest in the searchers have ongoing education, add a ton of value. I think they're so busy that they're not, I don't think they would say, oh, woe is me, I feel so lonely. It's probably, oh my God, there's so much to do, right? But it's a 2 years that go by very quickly, but it's drinking from a fire hose for sure.
Mm-hmm. Speaking of which, what are the mental, emotional, or leadership muscles searchers must develop to succeed, and how can they train for that?
I mean, the word entrepreneur comes to mind, right? You're every day you're going to fail in some way. Every day you've got to take what you've seen and learn from it and adjust, right? You got to be in shape. You can't. There's no. I have a cold today. I can't go to work. That doesn't. Right? It's gritty entrepreneurialism at the core. And not everybody should do that. In fact, most people shouldn't do that. It's not for them. And what I like about what we do is by the time someone says, I want to go be a searcher, they come in eyes wide open, right? When I went to work at Microsoft, I had no idea really what it was. And thankfully, they were willing to hire tenacious, hungry, hopefully smart people and say, figure it out, right? So there has to be a little bit of that element too. You got to be resourceful, right? You got to, and no, but you have a lot of people you can reach out to, and that's such a pivotal part of this.
Where can people follow what you're doing?
Yeah, thanks. www.agatehound.fund. Agate Hound. Agate is the state rock of Nebraska, where I'm from. We raised Irish wolfhounds when I was growing up. A rock hound finds gems, so that's the mnemonic on it. We've got. I do a fair amount of activity on LinkedIn with posts, as you probably have seen. And quite frankly, people can feel I'm pretty findable. And if people want to talk about this or get additional list of resources, happy to share it. I'm very passionate about this, as you can see.
Well, thanks for sharing a slice of your wisdom with us. Is there anything that we didn't touch on that you'd like to mention?
I do. I really, really, really work on creating community. And if any of your listeners are founders or investors, I have founders and investors dinners every month in San Francisco. Here we go. We serve my wine from Argentina, some Hand of God, and there's no agenda. We want to create more community, and I want to do the same for the search fund community. So we're always looking for great people who are good guests at dinner parties, and they should join. And again, I really appreciate the chance to just talk about my favorite topic, entrepreneurialism, because I think no matter where you are on the political spectrum, we can all agree that America is great because it's such an entrepreneurial country. And I want to be helpful in people's journey along that path.
Great. Well, thanks for talking to us today, Jon. Best of luck with the search of the fund of funds. And you're really, I think it's wonderful what you're doing, giving back to the community.
And remember, Agate Hound Fund also means always have fun.
Like it. Double entendre. All right. Thanks, Jon.
Thanks, David.